I'm Laura Lau, the Chief Investment Officer at Brompton Funds. The market realized that the artificial intelligence innovations by the Chinese startup DeepSeek could lead to cheaper AI development, and this sparked a sell-off in technology and AI infrastructure stocks. DeepSeek is a new AI startup out of China that developed a large language model, or a chatbot, that's competitive with some of OpenAI's chatbots for a fraction of the cost and the time. They developed it using some new techniques that should bring down the cost of training AI models and accelerate overall AI adoption. This is forcing tech giants to rethink their AI strategies. It calls into question the amount of capital being invested into AI models and data centers. History has shown that as the cost and efficiency of technology goes down, the adoption speeds up. Think of TVs, computers, cell phones. This is called the Jevons paradox. As technology becomes cheaper and the product becomes more useful, usage goes up dramatically. As the costs come down, more AI models will be developed, leading to more applications, to more usage. It'll become more ubiquitous, and the overall pie will get bigger. In the end, this will drive the need for more chips, hardware, data centers, electricity. Post this news, in their Q4 2024 earnings calls, Microsoft and Meta reiterated their CapEx guidance of $80 billion for Microsoft and $60 to $65 billion for Meta. Mark Zuckerberg at Meta had very bullish comments on AI. OpenAI CFO has said infrastructure is destiny. Brompton expected that there would be technological innovations that would increase the efficiency for creating models, inference, which is querying the AI models, and data center electricity usage. So we always expected the AI computing load to shift from training to inference. We also expected data centers and the related infrastructure for electricity generation, transmission lines to continue. Most of the projected data center spend was more for the inference and for non-AI applications. We expect the next phase of AI to be more in the AI adopters, such as software companies and IT consultants, who will benefit from increased competitions with more AI models and lower costs. The drop on Monday was due to the high expectations for AI and the resetting of these expectations. Brompton believes the market overreacted on the upside to the announcement of Stargate's $500 billion capital expenditures, and to the downside with DeepSeek. And one thing to remember is data centers really only account for 2% of the US industrial economy. In fact, many industrial companies cannot keep up with the data center demand for electrical components, cooling, gas turbines, and the backlog is 2 to 3 times the normal level. One good example would be GE Vernova. So GE Vernova, they build energy infrastructure, and their revenues less than 5% from data centers, yet the stock fell over 20% on Monday. So if you want to buy a gas turbine from them, well, you have to wait until 2029. Another company would be Prysmian, which creates power cables. So their power cables, again, you're going to have to wait 103 months for a backlog for their transmission cables. And natural gas producers and pipelines, such as Williams and Targa, also dropped. But their fortunes are actually more tied to the export of liquefied natural gas than data centers. So Goldman Sachs has forecasted the US power demand going out to 2030 post this announcement. And 60% of the growth actually comes from non-AI drivers, which are not impacted. This is a reminder that there are many drivers of infrastructure CapEx other than artificial intelligence. So other drivers are things like energy transition, the aging infrastructure, reshoring, electrification, and electric vehicles. Brompton believes this sell-off is an opportunity to invest in infrastructure and technology. We still believe artificial intelligence is the wave of the future, and the DeepSeek advances increases our confidence in this. For technology exposure, Brompton Tech Leaders ETF TLF. For infrastructure exposure, we have the Brompton Global Infrastructure ETF, BGIE. For more information, please go to bromptongroup.com/TLF for tech leaders and bromptongroup.com/BGIE for infrastructure.